Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Coming up today on Squawk Pod. President Trump's world in 2025. Did you know it's only been about 206 days?
He's a riddle wrapped in an enigma. Have you heard that expression?
I have.
Wrapped in a conundrum, surrounded by confusion.
I'm wrapped in all of those things right now.
Tech regulation's new frontier, AI-powered search engine Perplexity, making a play for Google Chrome. Antitrust AG under President Biden, Jonathan Kanter, weighs in.
Browsers are going to be the front lines for the AI wars, and I think that's becoming clear. And right now, Google and Apple own most of the distribution points.
Cava, shares of the fast casual chain are down almost 25% after the company's latest earnings report. CEO Brett Schulman says he feels good anyway.
Even before our IPO, I told the team, stocks will go up, stocks will go down. But what really will define us is how we build this over the long term.
Plus, the drive to lower interest rates and the rise of super babies.
Doesn't everybody think their own kids are the smartest?
It's Wednesday, August 13th, 2025. Squawk Pod begins right now.
Stand Andrew by in 3, 2, 1. Cue Andrew.
Good morning and welcome to Squawk Box right here on CNBC. We're live at the NASDAQ market site in Times Square. I'm Andrew Ross Sorkin along with Joe Kernen. Becky is off on this summer, August
13th.
The 13th.
Just gedecaphobia.
That's what today is, the 13th. On the back of some of that inflationary news, we can talk about what that means, but it sounds like the prevailing view is the Fed is going to continue to potentially maybe start lowering rates this fall in September. We'll see.
I would just say true or false. For the Fed, and this is a Nick Timmeros, it just sums it up.
Nick's good.
I was trying to say yesterday. For the Fed,
yep.
The lack of more alarming acceleration in price pressures likely removes an obstacle to lowering rates in response to growing worries about the labor market. In other words, that 3.1 core, that's not great. What we saw yesterday, it was hotter than forecast for a 3% rate, but 3.1, 3, it just...
Well, the question is whether
it's not as alarming as what people were worried about.
It's not as alarming. The question is it the beginning of something? Right?
With labor, you mean?
No.
You mean with a rate cycle moving lower?
Well, no. I think what we're saying...
Oh, is the inflation...
The inflation piece.
Right.
Are we starting to see a little bit of that? How much of it is it happening?
Supposed to be here 3 months ago, and then 2 months, and then 1. And we keep looking...
And that's the question.
Here's the thing. People, and I'm not mentioning any names, but people that keep saying that the market is reacting incorrectly to what I think it should be doing, and that the inflation is still there, and I haven't been wrong about inflation. It's just the markets have been wrong about the way it reacts to it. That doesn't help anyone. That doesn't help viewers. It doesn't help anyone. The market.
Well, no.
The market could be wrong. The market could be mispriced. The market could be ready for a correction. But when let's say it happens on like yesterday, you saw the numbers.
Right.
The market immediately took off. Is that a day where you would argue that actually it was worse inflation than expected and that the market should be down?
No. It wasn't worse than expected.
I think you're missing my point, though. That the market, when the market tells you something, then it doesn't matter what you think or what anyone thinks at this point.
Well, sure. I'm just suggesting to you that I wonder whether come this fall you actually will start to see bigger signs of inflation and whether... What we saw yesterday was the first sort of crack in that.
Last month, I think.
Right?
Too.
Because and by the way, it's not that it's shooting up. It's just here we were going down, and now we're turning around. It's going up again.
The last mile, as Rick always points out, has always been from 3 to 2 is always going to be the hardest to get. It wasn't, we got down here pretty quick from where were we, 9 at one point. So that's going to be the hardest.
But I do think, just to your point, one of the reasons that people thought their hair was on fire 3 months ago.
Yes.
Right? Including my own. Let's just make
because you didn't know Trump was going to pull back.
And that's the distinction. So when Jan Hatzius, who's now getting a hard time from President Trump, put out those reports back in, I don't know what it was, April or May, saying that he thought that there was going to be a potential recession as a result of the tariffs. He, I believe, when you go read those things, was saying, yes, if we have 145% tariffs against China, we'll have a recession. That's not a crazy idea.
Maybe an economist should just be able to interpret numbers, and no one is saying he should be a psychiatrist to know what Donald Trump is thinking. But there are some people that probably were able to gauge the likelihood of whether that was going to be the case. And I'm not saying that they're Trump fans, but people that think there's a method to the madness, or that he's a negotiator, or the art of the deal, or it was just negotiations all along. Maybe you could have been savvy enough to say the worst case scenario is never going to come to pass. But here's what worries me, is that we have gone from everyone predicting inflation from tariffs to now
nobody predicted
that's
inflation
what I mean.
from tariffs. And so I'm
you might be right about
like
that.
to be a little bit
you
in
might
the middle,
be right.
a little in the middle.
You might be right that at this point the consensus has totally switched, and now it's like yesterday I think when we hear Waller, I think Jim Bullard yesterday who was on basically said I don't think tariffs cause inflation. Said it outright. I think it's monetary money supply or whatever it is. And there are people.
By the way, he's also auditioning for a job. So let's just
but he's always
take
but
it
before
all
he was
get your salt shaker out.
Yeah, but you remember I said to him, I think 2 months ago you were saying that the labor the dual mandate, that the labor problem or the growth slowdown was more of a concern than inflation. And he said yes, that was 2 months ago. So it was long before he was. In fact, no. That'll be in a second. You're going to read that one. You're going to talk about Scott Besson yesterday. He wasn't on this show. It's disappointing. But somehow the word got out from another show, and you're going to talk about that.
We will.
The Trump administration, though, is reportedly considering changing how the government collects and reports those jobs data. It's a Wall Street Journal report saying officials are looking at different technologies now to make the process more efficient. That'd probably be a good idea, with aides saying that they want to improve the response rate to surveys, which, as we noted, have been plunging since the pandemic to below 60%. People just don't answer. President Trump fired the head of the BLS after a worse than expected July jobs report. That wasn't really it. It was the revisions. It was the largest revisions to the prior two jobs reports in the last 50 years was really what it was, not just because the numbers were bad. Meantime, the economists picked by the president to take over the BLS recently floated the idea of doing it quarterly, because you can't, by the third month you finally know, because you finally get
So he wants to get rid of the monthly numbers,
and do it quarterly.
My understanding is he wants to suspend the monthly numbers while they figure out new technology and other kinds of methods to get better, more frequent numbers.
This is one of our guys, E.J. Anthony.
But it is interesting that they're but this is interesting. So if you're accepting of the quarterly numbers.
Right.
You're saying to yourself that they're not.
The last month could be.
But if you're saying that the quarterly numbers are not rigged.
Oh, I don't. That's just the president says rigged. He throws out word. We said
but we asked him, and we said, is it political?
No one thinks it's rigged.
He said it was rigged.
I know he did, but he says a lot of things. Don't take him literally. Take him seriously. That's what we've said all along. No one thinks they're rigged. You can't rig them. Elaine Chao says you can't rig them. But they
I'm not suggesting they're rigged. I'm just suggesting
the standard of deviation is so large that you can't trust them.
Okay, but let's just then accept that they're not rigged.
I've always accepted that. That's why when we had him on, I was grilling him on that.
Okay, but he's continued to say he thought they were rigged.
Yeah, he says that about the 2020 election too. So he's,
okay.
I know you understand how it works with him by now. After one
whole
4-year term and then another 200 days, I know you understand.
I do. Here's the hard part for me. The hard part is sometimes you say, don't take him literally, take him figuratively, or don't. And then people say, no. Actually, he does what he says. So, and that's why, by the way, in the Jan Hatzius universe, when he's putting out a report saying he thinks there's going to be a recession because of tariffs, when he says 145% tariffs on China, there are some people who say, well, he said that's what he was going to do.
When you go to a doctor, do you think that it's art or science?
Probably a little bit of both.
Exactly. But with him, this is not a science. Every single situation, you've got to sort of use some intuition to try to really figure out what's going on. A lot of things he does follow through on. Other things he's saying that he's not even going to come close to following through on because he's doing something else, right? Look, I know him well, but I still don't know. He's a riddle wrapped in an enigma. Have you heard that expression?
I have.
Wrapped in a conundrum, surrounded by confusion.
I'm wrapped in all of those things right now. Meantime, Treasury Secretary Scott Bessent broaching the possibility of a 50 basis point rate cut at next month's Federal Reserve meeting. In an interview yesterday, Bessent highlighted downward revised jobs growth data for May and June that came in 2 days after the Fed opted to keep rates steady at the last meeting. He also said he hoped that the Senate would confirm Council of Economic Advisors Chair Stephen Mirren to fill that temporary Fed vacancy before the central bank's next meeting in September, so he could ultimately actually have an impact on that decision.
Where did I already lost it, but I read somewhere exactly what might have been on Twitter. You never know when you...
Well, that you never know, yes.
I could have read it anywhere, but reading, Bessent said, this is what I'm looking for in the next Fed chair. And when I read it, I got to say, I thought, James Bullard. You know, there were like 5 things, and each one of them I just checked about. We'll see whether that finally happens, but...
I like Bullard. And I think he's an experienced hand. People know him. I mean, people trust him.
Calm.
He's got some credibility.
Fearless.
And does not seem political to me. He does have probably a more...
Even though you said earlier he's trying to get...
No, he has a more of a right-leaning bent than a left-leaning bent. But I think on the whole, people on both sides of the aisle wouldn't look at him as some kind of political puppet or prop.
Right. But the way that, and I like Bessent too, and the way the parameters, I'm going to find it for you, but the parameters. I was going to say, by the way,
even though I just did say that about what he said yesterday, he also made other comments that weren't completely obsequious.
And these weren't new yesterday. These weren't since. Right. I don't think 2 months ago. I don't think he thought he was. Of course, they could always be auditioning. You know.
Right.
Okay, now to one unforeseen consequence of the rapid advancements in AI, a push by some people to have smarter babies. That's the subject of a new Wall Street Journal article, which begins by telling the story of a Silicon Valley mathematician who's hoping more intelligent children will save humanity from the perils of AI. It details testing that purportedly is effective at screening embryos for high IQ and high-end matchmaking that aims, at least in part, to generate smarter babies. Boosters of the so-called pro-natalist movement to have more children in response to declining birth rates. That's different, though. Includes Elon Musk. And the idea has been embraced by others in Silicon Valley, but questions about efficacy and bioethics remain. The journal article quotes one professor who said, testing embryos for IQ and selecting the top one could result in an extra 3 to 4 IQ points on average versus choosing randomly.
Doesn't everybody think their own kids are the smartest?
They do, and it's, what are we going to start, breeding for, like we do with livestock or corn? Apparently we are.
It's already happening. It's already happening.
Cheese will be next.
Coming up next on Squawk Pod, the latest inflation reading showed core consumer prices did surge just over 3% in July, which investors took as a sign that the Federal Reserve may have to begin cutting interest rates to combat slightly higher inflation. Our chief economics reporter, Steve Liesman, crunches the numbers.
There's been 2 criteria, Joe. How much is coming through, and is it bleeding into other areas?
And speaking of prices, what's for lunch? Brett Schulman, CEO of fast casual chain Cava, says he's still serving up for hungry customers despite inflation and despite tariffs.
We haven't seen inflationary pressures to date. Got to give a shout out to our supply chain team. They've been incredibly agile, really mitigating any cost pressures to pass through to our guests. Remains to be seen what's going to happen at the end of the year, but no pressure on the labor front either.
Welcome back to Squawk Pod from CNBC, today with Joe Kernen and Andrew Ross Sorkin. Here's Joe.
Yesterday's headlines, just modestly higher inflation from tariffs. Steve's going to dig deeper into it, but I just want to have a conversation with you before you wrote something out. You've been crunching some numbers. You can do that in a second. Can I read something to you?
Yeah, you got something. What do you got?
So this is what we were trying to say yesterday, and I think this is good. And then I want to ask you what it would really take. For the Fed, the lack of a more alarming acceleration in price pressures likely removes an obstacle to lowering rates in response to worries about the labor market. And it kind of sums up what I think we saw yesterday. 3.1 was hotter.
Right.
Okay, for core.
The 2.7 was lower.
2.7 was lower. 3.1 is not 2. What would be what would be the siren number for core? 3.5?
I think it's kind of like there's been two criteria, Joe. How much is coming through, and is it bleeding into other areas? And those have been
you expecting
the keys.
3.5?
It's not out of the question. Guys, let's just skip the first part of this and go right to the first graphic.
Uh-oh. This is good.
We're just
okay.
gonna,
all right.
Because these are sort of
we're
an
talking
question.
PPI's coming today, isn't it?
PPI's tomorrow.
Oh, tomorrow. Okay.
Yeah. So
that's what I meant.
You look inside the report. These are things, Joe. What we did is we calculated prices changes from January to July. Women's dresses up 10.4%. Tools and hardware 5%. Major appliances 4.8%. You can see toys and games. These are things that normally would be going down or flat or were offsets to it. And that's really a key. Guys, if you move on here, we're doing this live here. Another way to see the change, though, is from the prior declining trend. Mike Konzel from the Roosevelt Institute found some stark reversals. Take a look here. Tools and appliance categories was heading down. That's the trend line, the dotted line there, before the reversal that likely is linked to tariffs. Similar pattern in home furnishings and dozens of other products that are mostly imported. The trend line was down, and you can see the current line is up. Konzel found that 52% of 82 items in the core basket are up more than 3%. That was a sign of persistent inflation in the pandemic. Scott Lincecum from the Cato Institute tells me, quote, the big question is whether we're starting to see it move into the service inflation, and auto repair could be a sign of that. How long margins could hold before they pass on the tariff. At the same time, sort of talking about what Joe was talking about, those who see benign tariff outcomes have been proven correct in several respects. Some prices are falling, perhaps in reaction to other things being more expensive. That's that relative price thing we've been talking about, acting as an offset to the tariffs. And tariffs may not be sufficient in and of themselves to overcome these other offsets. Take a look at yesterday's CPI. Energy was down 1.1, so that's a big offset. Food at home down 0.1. Core commodities, though, were up. That's where it really was modest. But the surprise was that core services up 0.4. So the stock market trades like it's game over in this debate between saying it ain't going to ever happen and those warning just you wait.
That's a bad sign.
But the latter see overtime to this game in August and the inflation reports. I think that answers your question.
We talked about it earlier. Yep.
You know?
That the consensus has gone from, it's going to be terrible inflation to now people think that we know that it's not going to. Can I ask you one question?
Yeah.
I'm going to just, this is the perfect world that I wish there was some chance that it was true.
What's that?
You know how Trump always says that we're collecting money from foreign countries, and we all know that it's people that import it here.
I have an answer.
No, but my question is, let's say that there are countries that it's so important that they continue to export to us that they really have eaten the lion's share of the tariffs in their prices. So you actually could say that they're the ones that are losing out and actually paying for the tariff money that we're getting here. At least a part of that could be true. It could be 10%, could be 50%.
By the way, Goldman Sachs says it's 60%.
Think about
No, that was also including the wholesalers and the retailers as well.
And corporations.
But let me give you two answers to that question, which is the
wouldn't
first
it be great?
It would be great.
What a wonderful world it would be.
I'm going to give you two answers to that question. The first one is why I like my job so much. Mm-hmm. Because you know what? Tomorrow is not only PPI. I think it's tomorrow. We're going to get import prices.
Okay.
When did you ever get excited about import prices? I'm excited about it because the import prices will answer that question. If import prices are not falling,
weren't they down last time?
They've been kind of flat,
which is crazy.
It shows that they're not absorbing it overseas. If it was,
but the dollar's been weak too.
You have a currency thing. The other thing is, we have our CFO council, which is really a great group of people. One CFO said to me, I don't think we're that stupid and bad negotiators that our suppliers have 15% extra margin to absorb.
According to
Isn't that interesting?
Not really, because Elizabeth Warren thinks that every single Well,
Elizabeth
producer.
Warren is not making
She
economic
thinks every single
policy and
person's
is not
gouging
guiding my
every
thoughts.
chance they get.
But if you said, well, you got an extra, you're already making money and you have an extra 15%, I could have negotiated out, and that the world
Depends on the
market
business.
is so uncompetitive that there's an extra 15% hanging around.
What's NVIDIA's margin?
Well, that's the margin, but that's true. That's true, and we'll see. We'll kick it from margin. My friend Rob is begging me to not talk anymore. Maybe as are some viewers, I'm sure. But that's the two things. We'll watch import prices tomorrow, and margins is the other key.
Steve, thank you, sir.
My pleasure.
Cava shares down lower this morning after the fast casual chain reported second quarter revenue and same-store sales that missed estimates. The company also trimming its sales outlook for the year as it tries to top last year's very strong numbers when it added grilled steak to the menu. And joining us right now is Brett Schulman. He is the company's CEO and a bit of a brave soul. I give you lots of credit to come on TV on a morning like this and not to overplay it or downplay it, but the stock is off nearly a quarter this morning, about 25%, 24, a little over 24% right now. So before we even get, how are you feeling?
I feel good.
This is not throwing you for a loop?
Listen, even before our IPO, I told the team, stocks will go up, stocks will go down. But what really will define us is how we build this over the long term. We're not doing this for the next 10 weeks. We're doing this for the next 10 years and beyond. And so we're focused on that. And when you look at some of the metrics in the quarter, we beat our EBITDA, we beat our EPS, and our new restaurants in 2025 are trending at record level openings at $3 million plus run rates. So we're more confident than ever in the large-scale white space opportunity defining the metrics.
And so what do you think's happening? I mean, I think the investor class is saying, we expected you to continue to beat. We thought the forecast was going to be up and to the right, and it is not that way.
Well, markets can be short-term focused and very focused on same restaurant sales, which we did come in under expectations. And so
when did you start to see that happening?
So we did enter the quarter on our run rates as we expected. And then in June, we saw a pretty pronounced deceleration. But that also coincided with our year-over-year lap of our steak launch last year, which was our most significant protein launch in a number of years. And as we started to work through the quarter, we started to regain momentum and re-accelerated comps at the end of the quarter. Okay,
so what are you seeing, though? What do you think? What is the issue in your mind right now?
I think for us specifically, we are comping significant hurdles. If you think about on a 3-year basis, we grew traffic in the quarter 20%. Our AUVs have gone from 2.3 to 3 million during that period. So certainly high hurdles. And then I think there is macroeconomic uncertainty. I like to use the metaphor, it's like consumer trying to navigate through the fog. The fog has gotten denser at moments. It's gotten lighter when they passed the budget. I think that gave consumers certainty, whether you liked what was in the bill or not, at least gave you clarity. And then now we've got some shifting tariff policy that creates fog again. So we're just trying to focus on delivering a great value to our guests when they're feeling that fog or pressure.
Okay, so tell me what you're feeling on the labor front and what you're feeling on the product front, meaning the food and other wholesale stuff that's coming in that you need to actually buy to make the food for folks.
We haven't seen inflationary pressures to date. Got to give a shout out to our supply chain team. They've been incredibly agile, really mitigating any cost pressures to pass through to our guests. Remains to be seen what's going to happen at the end of the year, but no pressure on the labor front either.
Okay, but hold on. So on supplies, you're saying there's no pressure.
No, when you put the puts and takes together, and again, that's our job, that's our responsibility to try and work on behalf of our guests to mitigate any of those inflationary pressures we may be seeing by offsetting it with the other efficiencies in the business.
Okay, so tell me how you're doing that. Because by the way, that is the central issue for so many businesses that are bringing in goods from outside the country. So first of all, what goods are you bringing in?
Yeah, so our olive oil from Greece. Right. We do get some hormone antibiotic-free beef from Australia, and then some basmati rice from overseas. So the rice crop was great this year, so that helped offset any tariff pressure on that front. And then when you think about how we've architected our supply chain over the years, we do source a lot domestically. We are a domestic manufacturer. We have our 2 production facilities where we're vertically integrated to make our dips and spreads, which also helps pass that cost effectiveness and efficiency to our guests.
When you think about the rice, when you think about the olive oil, is it possible over the next year or two that you think you could be sourcing that domestically?
With the specificity of the ingredients.
That's the problem, I imagine.
Yeah, there's some of it. I mean, there's certainly things we can shift domestically. There's others that we're going to source overseas, and then we're going to work to make sure that we don't have to pass those costs along to our guests.
What are you seeing? So, okay, and that's the other question. Are you eating the costs?
No, if you look, we beat on restaurant level margin. We had 26.3% restaurant level margin. while absorbing any of those pressures around us.
Okay, what are you seeing in terms of the strength of the consumer to the extent that you think you're a barometer of what's going on? Are they trading down? Are they trading up? What's happening?
Yes, I think relative to our peers, we put up a positive comp when you've seen a lot of people put up negative comps. So clearly when people are choosing to eat out, they're choosing to eat out at Cava. So we're very excited about what we've seen and again, the long-term trajectory of the business and the structural strength we see underneath.
Okay, can I just ask you almost like a philosophical, psychological question?
Yeah.
So you introduced steak a year ago.
Yeah.
You know that that's working in a big way.
Yeah.
I imagine you say to yourself, this is working, but this is actually a problem for me. Insofar as you say to yourself, talk about the hurdle, like this is going to be a tough comp.
Yeah.
When did you say to yourself in the past 12 months, we're going to get to a point where maybe this is going to be tough? And and when you're thinking that to yourself, are you also looking at the stock and saying, you know, I wish it wasn't actually so high?
Yeah, that's the perverse nature sometimes of the public markets where, you know, you have to comp the comp, so to speak. And, you know, we could have done that. And we're going to launch chicken shawarma here in the first week of September, which is going to be another new protein launch. We could have accelerated that and launched it in June to match up with our steak launch of last year. But we didn't think that was the right thing to do for our operations team or for the business. And again, we've tried to position this business for the long term, very strong balance sheet, free cash flow positive, self-funding 18% plus unit growth so that we don't get unduly influenced by short-term decisions that the market puts pressure on, and we can stay steadfast on that long-term strategy and build the next large-scale cultural cuisine category.
Okay. Thank you for coming in, and thank you again for coming in on what is a tough morning, but we do hope you come on back, and we love to follow your progress. So
thanks for having me.
You bet.
Very tough. He brought food last time, and when I wasn't here.
You weren't here. He brought food.
You missed it.
He was trying to buy you off last time. This time he decided he didn't even need to buy anybody off because he's like the numbers aren't.
No, I know. That is a tough. Yeah. All right. Next time.
Next on Squawk Pod, Jonathan Kanter served in the Biden administration as Assistant Attorney General working on antitrust cases, like one against Google. Today, he is weighing in on AI company Perplexity's $34 billion bid for the tech giant's Chrome browser.
One of the things that Google is arguing in court is that one, Chrome has no value outside of Google, and two, it would be difficult, if not impossible, to divest the asset. Now, here you have Perplexity with 34 billion reasons why it has value outside of Google.
We'll be right back. This is Squawk Pod.
Up and Andrew, Q.
We're coming in hot. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin, along with Joe Kernen. Becky is off today here in the middle of August. August 13th is the day. AI startup Perplexity is now making an unsolicited bid, Joe. I don't know if you saw this. $34.5 billion. You like Perplexity. You use it.
Yeah. Well, I don't
to try to buy Google's Chrome internet browser. Now, that figure, higher, by the way, almost like double.
Yep.
Perplexity's current valuation.
But they got to sell it, maybe.
But the company said that several investors have agreed to back the deal. Now, this is all happening against the backdrop that the Justice Department has proposed that Google divest Chrome as part of that antitrust suit that the tech company lost last year. Now, neither Google nor Perplexity has responded to CNBC's request for comment. Of course, Google would like to keep the browser. Perplexity, by the way, whoever gets this browser, if somebody else were to, has tremendous value because once you're in it, people are just going to search, and that's how it's going to be.
I know about that, yeah. Who do you think is backing Perplexity? You have any idea? I mean,
I don't, but by the way, that would be it's an easy win. If Perplexity were to get this,
right,
it would be a huge win for them.
Total long shot, though, isn't it?
Totally. And by the way, what they have done, Perplexity's made a couple of what I call sort of moonshot bids. So this is one. They get a lot of publicity. Here we are talking about it. They, by the way, want to buy TikTok.
Yeah.
Same kind of situation. I don't know what's really driving all of this, but it's interesting stuff.
You said I like it. I still have my main problem with AI is Gigo. In my app,
right?
I don't know if you finished it.
I haven't because it's been that difficult.
Because what they collate from Reddit and everything else is just the same drivel that you see everywhere in what I call mainstream media, which my app is. So they don't have any insight. They don't use any thinking. All they do is collate the same tired garbage in, garbage out stuff that they're finding in Reddit and other places. True. So it just comes out. It's just more of the same pablum. When are you going to finish mine? When are you going to finish mine?
Well, I have to tell you, ChatGPT 5, and I know we talked to Sam about it before, it was looking good for me for a while. It's slower than than 4 was. No question.
With the coding?
Well, the coding may be better. The vibe coding may be better, but it's still running into lots of problems. I've been trying to build something that's pretty cool that I'm hoping you're going to like when it's done, but it's not just like doing it for me. Trust me, you got to know what you're doing a little bit.
I think our app could improve all of AI. Let's bring in, joining us now with more on the legal landscape for big tech. He's probably laughing. Former Assistant Attorney General Jonathan Kanter. He is a distinguished law professor for the Washington University in St. Louis, great school, great town, and a CNBC contributor. Welcome again, Jonathan. We usually see you on set.
It's great to be here. I'm here in beautiful Stowe, Vermont today.
Lovely.
What do you think of this? What number one, is there any possibility that Perplexity could succeed here?
Yeah, there's a possibility. So the Department of Justice, as you mentioned, has requested the court require Google to divest Chrome. This is a clever move by Perplexity, because one of the things that Google is arguing in court is that, one, Chrome has no value outside of Google, and two, it would be difficult, if not impossible, to divest the asset. Now, here you have Perplexity with 34 billion reasons why it has value outside of Google, and if they're willing to buy for $34 billion, then clearly it's an asset that they can achieve, or an acquisition that they could complete. The other piece that also is important here is browsers are going to be the front lines for the AI wars, and I think that's becoming clear. And right now, Google and Apple own most of the distribution points. And the focus of the antitrust case was locking up distribution points. And so the same day you have Perplexity bidding to buy Google's browser, you have Elon Musk talking about Apple locking up distribution points for OpenAI. So I think what we're seeing here is the next stage of the platform wars, where Google and Apple are competing, or at least seen as bullies to some degree, by the rest of the industry who want access to distribution.
Did you understand? We went back and forth yesterday with exactly what Elon Musk was accusing Apple of doing. Is he got a point, or is Apple? I mean, Apple's allowed to control how they rank.
Yeah, it was a clunky email. I mean, it's always hard to get in the mind of Elon Musk. I think what I read between the lines is that he's saying that Apple, because it owns the distribution points, is cutting a deal with OpenAI to distribute OpenAI, exclude others, and maybe there's some funkiness going on in the App Store as a result. But I think it's really just a relative of the case that the DOJ won under our watch against Google, which was locking up distribution points on Apple, Chrome, Android, and these other platforms that are really critical to these technologies, whether it's search or an entry point for AI.
Well, let me ask you a different question, Jonathan, which is, you were fighting, I hate to say yesterday's war, but we are now moving into a place where we're talking about OpenAI constantly, Anthropic, Perplexity, et cetera, Gemini. It seems to me that you're right. The entry point in is still a huge value proposition. But all of the other component parts that you went after historically, the advertising side of it, how they interacted with different platforms and things, doesn't that seem to be something that, if we're talking about the world of technology a couple of years from now, is going to look very different?
Well, it depends how what happens. I mean, when we asked for divestiture of the Chrome browser, people said we were fighting yesterday's war and that browsers were no longer relevant. And now we have Perplexity bidding $34 billion because browsers are the front lines of the AI wars. I think what we see here is, do we want next generation of technologies to thrive and compete, or are we going to have the previous generation of technologies going more slowly and locking up markets? And I think that's really what this is about. But let's be clear. I mean, online advertising is still a massive business. It's still most of Google's profits. iOS is still a massive business. It's most of Apple's profits and valuation. So these businesses are huge and really important, not just for today's technologies, but for tomorrow's technologies as well.
What did you think when you saw this, just on a completely different subject? What do you think of 15% of the revenues of NVIDIA and AMD going to the U.S. government? I mean, it'd be nice to It's always nice to bring in some money with the deficits we're running. Is this the way to do it?
No, it's not. I mean, we're not China, right? When you start blurring the lines between the state and the state's enterprises or the free market, we start to look a lot more like China. And whether it's taking 15% of everyone's profits, I mean, that's just a tax, basically. But it's also nationalizing the business. Similar, I think there was like a report that Anthropic was going to offer to give Claude to the government for $1. Again, it starts to blur those lines and frankly raise lots of national security and other kinds of questions as well.
Yeah.
I got one for you.
Well, I won't do the whataboutism. I always get yelled at for that.
I'm going to go totally political. I want to go totally political with Jonathan.
Yep.
You ready? Because here we are. Here we are making the argument that this president has gone into this sort of socialistic,
you're gonna be me on this?
Marxist world. I get it, and people have made that argument. So my question is, and you've just said that I don't think you like that. What do you think of Mamdani?
I'd like you to create an app for me that is less political. Andrew, listen, I think Mamdani is talking about issues that people care about, which is cost of living. And so setting aside whether you're for him or against him, I'm not a politician. All I'm just saying, no, my God, I mean, the fact of the matter is he's succeeding because he's talking about issues that people care about.
Jonathan, on that score, you're right. And that's why I agree that's why he's succeeding.
But that's a total cop-out. That's a total cop-out, and that's exactly what Elizabeth Warren said. And you really ought to be able to be more. You're a capitalist, Jonathan. I hope.
I am a capitalist. I am an arty. Listen,
well,
Joe.
So that's
let me
why.
be very clear.
Look, Jonathan,
I am
the reason I asked you the question is not whether
socialist.
Mamdani is I agree with you. He is turning out to be, thus far at least, a good politician. The question is whether you believe in some of the things that he is articulating as part of his policy positions. Namely, the idea of socialism, namely the idea of freezing rent, giving out products and other things like food for free, things like that. So do you, as somebody who's talked about capitalism and such, look at somebody like him versus maybe somebody like Cuomo, and Cuomo has his own problems. Let's be very clear about that. How do you look at that? I know you're not living in New York right now, but nonetheless.
Yeah, I'm also not a politician, but I'm a capitalist. And so I don't agree with everything he says and everything he stands for. But I think he's talking about issues that resonate. And I think to the extent that any politician, whether it's Donald Trump, who has done this effectively as well, or Mamdani, to the extent they're talking about issues that affect people's cost of living, they're more likely to get traction. And that's really what's happening here. And how you solve these problems is a good debate that we should be having. But I think a lot of the typical cop-out from Democrats in the past was to try to find safe issues without really talking about the economy. And I think we have to do that now.
Yeah, I guess the point I was making about the state-sponsored capitalism in the CHIPS Act, when you mandate child care coverage, union wages, ESG, DEI, both sides do it, and I always, it's whataboutism, but there's whataboutism and there's hypocrisy, and that was a mess. A lot of the stuff that was in the Biden administration's that's legislation
right.
too. I'd almost rather get to 15% from NVIDIA than do all this feel-good stuff that it just ends up hurting the people that
so
you're
in
trying to help.
Favor, Joe, it sounds like you're in favor of a 15% chip tax.
15% tip tax. You mean we shouldn't have gotten rid of the tax on tips? I mean, I'm not.
No, chip tax.
Oh,
chip tax.
No, I'm not saying that. I'm just saying that a lot of finger pointing from people about state-sponsored or industrial policy, and the masters of that was the Biden administration, and now suddenly everybody's found religion.
Yeah, listen, I think we can get into the whataboutism, but I will say there's a little bit of a difference when the government is giving incentives for somebody to do something versus simply saying, if you're going to do business with somebody else, I need my taste. And there's a difference there, I think, fairly.
Well, I'm sure I can find some examples of things that were other than incentives that during that time. But Jonathan, thank you.
All right, that's the pod for today. Thanks for listening. Squawk Box is hosted by Joe Kernen, Becky Quick and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern. Follow Squawk Pod wherever you like to get your podcasts and get the very best of our show every day, and you can listen to it anytime you want. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.